All right, welcome back everyone to my new YouTube channel, Invest the Rest, where the saying of this channel is take all your extra money, all your extra cash, discretionary income, and anything else you can get your hands on and get it into the market to make more money, right? More time in the market means, in the long run, more money. Now, if you've been following my channel up until this point, you'll know I have 3 different $10,000 accounts that were started at the beginning of 2025, specifically January 2nd. And many of my strategies have a high amount of risk. The one I'm going to do an update on today that's focused on option trading. There's a fair amount of risk in options trading. I have a high yield dividend ETF focused account that also has a fair amount of risk. But then I also have a growth fund that focuses on medium to low risk index funds. I'm a little bit younger, so I don't mind the additional risk in my portfolio because if something does go bad, I have longer to recover. As always, this is not financial advice. I am not a financial advisor. This is a discussion about my financial journey, and all of my videos are for entertainment purposes only. As always, do your own research and truly understand the products you are investing in before you use your own hard-earned money. As I said, today we're going to go over the $10,000 options trading focused account. And one thing I want to talk about right at the beginning here is the thumbnail. For those of you that have seen my previous videos, you may have noticed that it said $150 per week or $600 per month. I have raised the goal of this account to a $600 per month income goal versus the previous $500 per month goal. The reason I did that is because I think with the premiums that are being offered right now on MSTU and MSTY, which are two of the main funds that I'm trading options on, they're very good premiums and they have a very good amount of volatility in the fund right now. The market's been up and down, and we've been able to harvest quite a bit of premium. So I really want to push the bounds of this fund, see what it can do, push the performance as far as we can, and really try to get to that $600 per month goal out of the gate first month in 2025. So as I have on the screen here, right, the same table that I've been using to track my trades and the premium gained. My previous video goes over the 2 put contracts that were assigned and the 200 shares of MSTU from week 1 that we were forced to buy at our strike prices of $10 and $9.50. My previous video also covers the first 3 positions that I opened for MSTU for week 2. Specifically, the 2 call contracts, covered call contracts that I sold because the previous 2 put contracts in week 1, highlighted in green, were assigned. I turned around and opened 2 call contracts for the same strike prices for the second week. Again, because I'm not interested in capital gains or anything like that in this account. I'm only interested in the premium. So if I do get assigned shares and I'm forced to buy at that strike price, I'm going to turn around and open up a call contract to sell those shares at the same strike price the following week. For the $9.50 strike price contract, the second one here on line 11, I did have to open that on the following Monday because of the way that MSTU closed out week 1 and how close it was to my $10 and $9.50 strike prices. I highly recommend viewing that video because it was quite interesting to see what happens when a fund closes so closely to my strike prices of my contracts. So I opened that on 113, got 0.27 cents or 27 cents per share times 100 shares minus fees means that my account got $26.33 in premium. Additionally, on Monday, because of the price action on MSTU, I decided to sell a second put contract on MSTU. MSTU took a little bit of a dip, as did the entire market earlier this week. And I saw an opportunity to get a decent amount of premium, which was 24 cents per share or $23.33 at a very low, what I would consider, based on my knowledge of MSTU, a very low strike price. So I said, I can get $23 and I can sell a put contract for a strike price of $7. And I thought that was a really good deal. The market dipped, and I had a high amount of confidence that throughout the rest of this week, the market was going to slowly recover, as it has. And for those of you, again, that are just joining us, when I sell a put contract, that means that from when I open the contract, for instance, on 113, sometime between 113 and 117, if MSTU drops below the strike price, in this case, drops below a price of $7, I could be assigned the contract by the buyer of said contract and have to buy 100 shares right here of MSTU at $7 per share. So by January 17th, if MSTU is under $7, I still have to buy at $7. For instance, if it's at $6 or $5 or $4, that buyer executes that contract that I sold them, I am still obligated to buy at $7. Now, $7, again, is a very low price for MSTU, in my opinion, and I didn't think it was going to go much lower than that. And so I took the opportunity to sell that contract for what I thought was a low amount of risk. Today, Thursday, January 16th, I also saw an opportunity, because of the action of MSTU throughout the week, to sell another put contract for 100 shares, 20 cents a share, received $19.33 in premium at a strike price of $10.50. MSTU has moved almost $4.50 up and down over the past week, which is quite a bit of movement, and that volatility is how I'm really going to harvest a lot of premium by selling these contracts. So let's do a little recap of week 2, where we are. Obviously, MSTY contracts up here at the top. If MSTY stays between $26 and $33 as of tomorrow, market close tomorrow, both of these contracts will expire worthless to the buyer, and I will retain the premium that I've collected when I sold those contracts. I won't be assigned shares to buy, and I won't be obligated to sell shares that I own. For the 5 contracts that were opened in week 2, MSTU is currently at $11.39. We have a wide range of strike prices of those contracts. The two call contracts that I sold at $10 and $9.50, right? That gives the buyer of the contract the option to purchase those shares from me at $10 and $9.50 as of market close tomorrow. Considering MSTU is at $11.39, and I believe it'll continue to climb tomorrow, there's almost 100% chance that these 2 call contracts will get assigned. I will have to sell those 100 shares, each 100 shares at $10 and 100 shares at $9.50 to the buyer of the contract, and then they can turn around and sell it on the market for $11 or $12, whatever price MSTU is at, right? Because that contract that I sold gives the buyer the right by a certain date to buy my shares at the agreed upon price. Now, I don't lose any money because I bought these 200 shares at the same strike prices in week 1, okay? And all I'm looking to do is retain all that premium between the 4 contracts, which is about $142 without messing around with capital gains. So those will get assigned. Those 200 shares will be sold. The put contracts, I believe, all will expire worthless, okay? If MSTU stays above $8, $7, and $10.50, those put contracts will expire worthless. Because a put contract, when I sell a put contract, it gives the buyer the right to purchase, no, excuse me. When I sell those put contracts, it gives the buyer the right to make me buy 100 shares at the strike price. Okay, so they can sell to me rather than me selling to them. So the buyer can say, I want to sell you 100 shares at $8, and I have to buy those shares at $8. Now, whatever buyer bought these contracts, that wouldn't make sense because they don't want to sell 100 shares to me at $8. They just as soon sell those 100 shares on the market at $11.39. So if we stay above $10.50 by market close tomorrow on January 17th, it's highly likely that all three of these put contracts will expire worthless for the buyer. We won't be forced to buy those shares. And again, we will retain $73 in premium. I expect the same to be true for the MSTY. Those will close out. MSTY will stay where it needs to between 26 and 33, and we will retain the $67.66 in premium. That means at the end of week 2, end of market close tomorrow on January 17th, we will have no open contracts. We will have sold all of our shares that we got assigned. And rolling into week 3, we can be very aggressive in selling put contracts for MSTU through all of next week. Now, next week is a shorter trading week. I believe the markets are closed on Monday, if I'm not mistaken. So there will only be 4 days to trade those contracts. Now, because of that, I may open some put contracts for next week. I may open those tomorrow, depending on the price action of MSTU. So, as you can see up here, I always like to go over it. Well, first off, right, with all these contract premiums being added up, we are already at $282.97 in premium. That's our money. We're almost over $300, halfway to our goal. We've also used $7,100 in total of the total $10,000 account. That means that, $1,950 was assigned to us. Those are these 2 MSTU put contracts. And then $5,150 is future exposure. For instance, if MSTU were to take a nosedive tomorrow, we got assigned all 3 of these put contracts. We had to buy 300 shares. These 100 shares right here didn't sell, and we would be out that money, right? Because we'd be forced to buy. This is our total exposure, $7,100. And we don't want that number to go over 10 grand, right? Because if it goes over our $10,000 amount, that means we don't have enough money in our account to cover all of our open positions if those contracts are exercised. So we have another, rolling into week 3, we can be a little bit more aggressive, especially after many of these contracts close. We have $3,000 at least, if not more, to play with in week 3. So that's the update for today. I'm going to continue to work on this spreadsheet. I will update this spreadsheet at the close of market tomorrow and hopefully put out a option account update video this weekend so I can show you what closed and what new positions I opened for week 3. And we'll keep the ball rolling. $282 rounded up to $283 is great income for 2 weeks of trading options. We've been lucky in some sense on the movement of MSTU to do so well. If MSTU continued to decline, it'd be a little bit harder of a trading environment. But we're going to push that goal. We're going to get to $600 a month in January. If you liked this video, let me know down below. Let me know your suggestions. What strategies do you guys want to see? What strategies do you use? How can we make this account better? I'm willing to try different things. Like the video, subscribe, be notified of new account updates. I'm probably going to do 1 to 2 $10,000 account updates a week. That is 1 or 2 videos per account that I have. And we're going to keep the ball rolling. So far, all our accounts are doing very well, and I hope that trend continues into 2025. As always, thank you so much for the support. Thank you for watching, and I'll catch you on the next one.